All right, good morning, welcome, thank you for coming, thank you for everyone online. Just to let you know that we will have breaks in between each speaker, so don't worry if you get a little tired or whatever, we'll be back. And also, the big thing that I'd like to tell you is that layout wise today, if you look at things, it's basically like an audit process. So you have the preliminary, which will be Lori here. There'll be the mid, which is me, which is basically your audit fieldwork time, and then the end is basically letter statements, wrap-ups. That's how it's structured. At any point in time, anytime on with any school, please fire away questions. We're here to help you. The whole point of this for you, I mean, it doesn't help me any if I don't know what you need. So please fire them away. And you also might notice any one of us three might chime in at any time because we have something to add. Give you a little background. My name is Ed Ritter. I work for Clifton Larson Allen. I've been an auditor for a little over 6 years now. I specialize
was muted. So that's how we ask questions. Yep. Okay.
For some reason, I can no longer hear you.
I walked up the stairs. Okay, are you able to hear us now? If you can go ahead and just chat in the box if you're able to hear. Okay, we're great. So
we're good?
Yep, we're
all right.
Let's keep rolling.
So once again, my name is Ed Ritter, Clifton Larson Allen. I'm an auditor, 6 years. Lori right here, she'll be your first presenter. She works for Messmer Schools and Chief Executive Financial Officer at Messmer, and she's been there for quite some time. She brings the aspect of one of you right up here. So please fire away on our questions. Lastly, Jason Rassi, right here on my left. He is a partner, and he has been doing this for how many years, Jason?
It'll be my 19th year.
19 years within the schools. So once again, we bring a wealth of experience in different firms and different experiences. So big point is, this is preliminary work. And when you think of preliminary work, this is pre-audit, pre-field. One of me showing up at your door, okay? Anytime you're thinking of audit, you can have the preliminary experience, which could be a couple of us showing up, but it's also all the documents and things you got to get going in the beginning. So we'll start out the whole presentation. Lori, come on up.
Okay.
Oh, let me click for you.
Not gonna
I will click for you. You got it.
be on the wrong slide.
No worries, you're fine.
Just so, yes, as Ed said, your auditors, one or two of them may show up sometime in May or June or before they come out for the field work after the end of the fiscal year, or they may not show up. Sometimes the auditors don't show up, they just send things, especially if it's your second or future year after your first year. They will show up and they will try to get some of the preliminary work done. So they may, they're going to review things and do confirmations, which I'll talk about in a minute. And they are going to try to get possibly some of the testing done of your expense accounts or something like that. So they're just looking ahead to see what they can get done ahead of time so that they can spend less time during field work when they come out after the end of your fiscal year. So you don't know it, but you've been prepping for your audit all year round. Even if you're a brand new school, you really have been. You've done the budget and cash flow with DPI. You worked through all the things that DPI has asked for you, from you, all the checklists, all the budget and cash flow items, your policies for eligible expenses, and all of that. And the auditors are just going to come in and then they're going to ask you to basically commit that all to paper so that they can test it to see if you're following through and following your own policies. And the good news is in the first year of your audit, if you haven't gotten everything in order, your auditors are going to guide you into getting it in order for your second and subsequent years. And Jason will talk about that at the end with the wrap up. When they issue the management letter, they'll have comments about everything that you need to improve upon so that you can get yourself in the best order that you can. So one of the first things your auditor is going to do, either by sending it out or coming out in preliminary work, is an internal control questionnaire. And you have that handout in your packet. It's item number 1. And if you've looked at it, or if you want to look at it now, it just asks a lot of questions about how your accounting system and your segregation of duties and your controls are set up within your organization. So there isn't, a lot of times in small organizations, you're not going to be able to get everything completely in order, but your auditors are going to work with you and give you suggestions for what you can do to help with segregation of duties and controls. So if you just look through this, they're going to ask you about just general questions. They're going to ask you about how you handle your cash flows, how you handle your accounts payable, accounts receivable, all the flow of all your information. So this is going to take quite some time to fill out, especially your first year. So plan to set some time aside. And if they send it ahead, it's best to try to complete it before the auditors get there. And then you can sit down with them when they do get there and they can talk over the things that you have questions about or that you don't necessarily understand. So plan to spend a good several hours getting that complete in your first year.
Where is that document?
It's
It's an attachment or something.
Ashley, all the documents are out there, right?
Yes, or out.
One, or
Are they all available?
this document will come to you from your auditor.
Oh, they were emailed in an initial email. They're not on the website yet.
Okay.
They will be posted after this.
So all the documents, just, first off, they're supposed to be somewhat tied to the PowerPoint. I do have there's a slight error in one of them, and that's number 4. There's 2 number 4s. But the fact is on these documents, and this is the biggest thing that you need to realize, what you just saw was of one version.
Yeah.
Every firm's version is a little different. So for example, if you would have gotten my version, you'll see it's a multi-tab Excel and every single area is broken out. So AP would have a separate one. I assume if you got one from Wifley, it would look different. So, but these will all come from your auditor. You will fill out a piece of it. The auditor then will test off of that. Okay, so you're basically going to say what you all do, how you do it. And then the auditor is going to come in and say, is that right? Is it being done right? Is it being followed? That's the whole point of the control doc.
I can pass it around if you want to look at this example, and it goes through all the areas too, like Ed was talking. His would come with Excel workbook with tabs. This one just lists them. It starts with cash, accounting system, financial reporting, after some general questions. So we'll take a look at that. And if you have any questions, if you want to look at it and have any questions later, we'll get back to it. So your auditor is going to come. That's one of the first things they're going to need to do so they can gain an understanding of how you track your accounting and how you report on your in your financial statements. All disclose activity. And another thing that they'll try to do in preliminaries, which we have, is item number 2, which is the audit list. There's a little section on the top.
Yeah, I can.
Nope. There's a little section on the top that they want to have you available before field work starts. So these are the things that they would take care of in preliminary audit work. So there's a little section on top. And again, this is just one version of this list. So they're going to ask you when they come out, the first section is things they're going to ask for like about a week before field work. So when they come out to do preliminary work, they might actually ask for some of these things. They'll ask for a trial balance as of the date that they're there, because they want to take a look at what is going on so they can get an understanding of what they're gonna have to do at the end of the year. But these are things they're actually gonna ask for right before they come up with field work. Again, they're gonna be looking at all sorts of things and anything that you have to get an idea of what it is, how your organization is financially being run.
In addition with that control doc, just to give you one other thing, that's a one-time thing. So you don't fill out that document year after year. What happens is you fill it out once, the auditor knows what's going on, and then you make small adjustments moving forward. So just so you're aware, if you're a first-year audit, you're gonna have to book more time. All right, it's gonna take more time to fill out that control because you're starting from scratch. After that, it becomes just a piecemeal adjustment.
I would suggest too, you might have some downtime, second week of June or whenever your school's done. If you haven't seen a document like that yet, reach out to your auditor and see if they can give that to you so you can have plenty of time to fill that out.
Yeah, you should actually be getting that anytime now. This is the list, the example of the list. They asked the auditors will be asking for.
Lori, I think you need to project more so that they can hear.
Oh, okay. Sorry. Okay, and also just be aware that auditors are gonna send you lists and they're gonna send you checklists. They're gonna ask you a lot of questions written, and you're gonna know about them ahead of time. But when they actually arrive for preliminary work and or field work, they're probably gonna ask for some things that aren't on the list. Because as they're learning to understand your organization and going through the lists, they're gonna find some things that they need to ask for to get more information about you. And they're also going to need to do some testing that they may not know about until they start looking into your account balances. So don't be taken off guard by the fact that they're gonna ask for things that they didn't necessarily ask for in writing. So one of the things that is definitely an easy thing to do, which they should be sending out now.
We have a question that came in.
Okay,
If we have gone through an internal control audit at the beginning of the year, will we need to complete this form?
probably. Are they talking about the fiscal and internal control practices report that they went through with the auditors? in the
I'm
fall?
guessing so, yes.
Yeah.
You will still need to fill out this form because this form will be actually more intense than that was. So during the fiscal and internal control practices exam, the auditor is required to look at a specific set of items. It was very specific, but it wasn't looking at your overall control environment and all of your segregation of duties and your flow of information and cash and accounts receivable and accounts payable as it goes through. They were just looking at select things for testing. So they're gonna need to get into it in more depth than they did in the fall.
The big thing too, and this is just to understand, the fall fiscal and enrollment audit, the spring enrollment audit, those are DPI driven items. DPI tells us exactly what to do. We get a booklet to do it in. We do exactly what we do and we give it to them. Your audit that's happening around after 6:30 is driven by accounting standards. It is not DPI driven. Thus, we have to follow accounting standards to do that. And that's why there's different things involved. Now, yes, you still submit your audit to the DPI by October 15th, but the reality is that is governed by the overall accounting structure of all auditing. That's why it's different.
And it's probably gonna seem to you like they're doing the same thing over again, but they're actually not. Okay, so then one of the big things they'll ask for in preliminary work and definitely prior to field work, even if they just send it to you, is for you to fill out forms that allow them permission to confirm your account balances. So your bank balances, any debt balances, and then investment balances, accounts balances, depending upon what your accounts receivable are. And then also typically pledge and contribution balances if you've gotten large pledges or contributions. So the samples of all the letters are in your in the packets that you got, and they're probably very similar amongst auditors, especially the bank confirmation one, the first one, because most use the standard form. But they might be a little bit different. So what happens is you fill these out and you have an authorized signer sign, especially the bank confirmations, and then you give them to the auditors, and the auditors mail them out to the bank or the mortgage company or the debt holder or the contributor or the pledge, the donor that pledged something, and then they receive them back at their firm. So that's very important. Do not mail them out yourselves because the auditors have to control the mailing. And if it's your first year audit, they're going to be doing the same confirmations of your balances from 6/30/18 as well as 6/30/19. So you're going to have two sets of these, one for each year.
If you use a major institution, do not be afraid if it's email driven. So all your major institutions, US Bancorp, Associated, any of the big banks in the country use what's called confirmation.com, which is an online service. They don't take paper ones anymore and they will not accept them. So unless you're using small credit unions, they use this online service which ships it all to you and you get an email saying, I agree, you can confirm my balance. And then it comes back to us and it's done all electronic. It costs us $30, 23, 25, whatever, somewhere around there, per each one. But it's an all online thing and they don't accept the paper because they don't want to deal with it. That's just new, that came about 5 years ago.
More institutions are going to it.
Yes, they like the online system.
Yeah, ours changed to that last year for the first time. So we all got an email. I had to say, yep, go ahead and confirm it.
And by the way, since these are all 6:30, we want these probably before we even get to 6:30. Because if we want them in the mail, gone, and that way back to us by the time we step in foot in your building. Otherwise, we're playing blind. So that's why we're going to want these early on.
Okay. Another thing is this, the biggest will happen during your first year audit. The auditors are going to request for a lot of permanent file items, such as an IRS determination letter to prove that you're an exempt organization, any debt or line of credit agreements, any big contracts or agreements that are dealing with material amounts of money, so larger amounts of money. Any leases, if you had any IRS bylaw amendments or your bylaw amendments and you sent them to the IRS, they're going to want to know that that changed during the year, and your accounting policies and procedures. Your accounting policies and procedures manual, which is going to include your eligible expense policy, your capitalization policy, and the electronic funds policy that the TKI required you to have as you came into the program. In subsequent years, if any of these things have changed, which there's typically something that changes, usually your agreements or your leases, sometimes you'll have a bylaw amendment. Anytime something changes, you're going to want to give that to the auditors during the preliminary work so that they have it. That tells them what your organization is like, what's happening in your organization, and that helps them prepare for the audit field work. Usually also they would ask for any employee handbooks, anything that speaks to how your organization is run financially. So.
We will use that in testing too. So if you tell me that you have a vacation policy of X, I'm going to look in your handbook to support that. That's how we test. So that's why we want all that stuff. It's not just for collection purposes.
No, they actually read it. And they ask you questions about it and they test it.
Yeah.
So if your handbook says, as Ed said, if you have a vacation policy and you pay out your vacation when somebody leaves, if somebody left your organization in August, auditors are gonna be looking to see, hey, did you pay them out? How much did that cost? Is that booked as an accrual at June 30th? Because you owe that money.
It also tells you that you better keep this stuff up to date, because we go to a lot of, I was just in a school last week and they hadn't updated theirs in 8 years. And they told me specifically, Ed, it's just not that way anymore. That's a problem. And when I just hear that, I'm like, oh, like, please, because I know a lot of these have to be approved by the boards of your schools. So please make sure they're up to date. Please make sure you have what it really is, what you're doing, because it's hard for me to go, well, we do it this way, but it really says it that way. That puts us auditors in a kind of a bind. And then we don't know which way to go. So please make sure this is all up to date. Otherwise, we're swimming in tough waters.
Again, back to they're gaining an understanding of organization and they're testing to see that you're following what you say you do. So they can't test something that you say you do if it's one thing is telling them that you do something one way, like you don't pay out vacation, and then all of a sudden you pay it out. They're gonna be like, what do I do? Definitely will result in a management letter comment. Okay, so and there may be other permanent file items. If you have anything else that would help the auditors understand how your organization is run, give it to them, because they're going to want to see it, and that will help them do their jobs more efficiently. And then some really basic things about when the auditors come, which people don't necessarily think about until they get there. They need to have an ample space to work. So they should tell you how many people are coming and how many days they expect to be there, so you can plan where you're going to put them. It seems to always be a problem in our school because we don't have enough space. So we're always scrambling to find a room to put the auditors in that's actually comfortable and large enough for them. So we often had to rearrange furniture and all that. We finally rearranged our entire business office. So now we have a meeting space in our office and the auditors have a place to be. So it's much nicer for all of us. They're going to need Wi-Fi access because a lot of their work is electronic and driven through email or the portals. A lot of them have portals where you'll upload electronic information for them. And probably most of them prefer electronic information. So anything you have in all the things you're going to give them, if you put it to PDF or already have it electronically, that's how they're going to prefer to have it. And a lot of times they'll carry scanners too into the field. So if you don't have it or don't have everybody do it, they will scan it and put it in their stuff electronically. But if you have it electronically and you give it to them that way, it'll just be more efficient for everybody. The biggest thing is when the auditors are coming for preliminary work, for field work, and then as you wrap up the audit, plan your time to be available to them, because they can't get their work done if you can't answer their questions. So I find I try not to schedule. I usually do have to schedule a couple of meetings during the few days that they're there, but I try really hard to be available as much as I can so that we can just keep the audit going, because I don't want the auditors to be there any longer than they need to be there. I want them to come and go as quickly as possible. So they might be on. Typically for preliminary work, it's probably going to be just a day, maybe a little bit longer if you're a very large school. For the field work, it's going to be probably a few days.
Or the first year.
Yeah, and probably a week first year, closer to a week. So just plan to try to be available and answer their questions. And it will be, the first year will be the hardest for sure.
Question,
Yes.
how much lead time is normally given as to when the auditors will be coming?
Lots. Like you should know, you should almost be starting to know very soon when they'll be coming in the summer to do the field work, either in July or August or September.
Do they tend to be flexible due to vacations, etc.?
They do. They try really hard to schedule around client schedules.
So usually, so for example, I already have talked to all my clients for the fall. Pretty most of them for their preliminaries have already been lined up if they have them. Okay, so that would be happening in early June. And then we started talking all the falls last year, saying does the same time period work? So they almost have almost a year in advance based on the fact that the last year's time work, because we're going to try to do it the same time every year. It just makes it easier for us to staff it. It's easier for you guys to be prepared for that. And don't forget, it's pretty much going to be end of July through, let's see, August, September, through September. That would be pretty much the time frame that we're going to be on site.
Probably not even too late in September, because the reports are due October 15th,
We get tight.
and there's things that have to be done after they leave the field.
Just to give you guys, and just this is something funny, but when I was a second-year auditor, I was sent to a school, and they gave me a little round table in the main office where the director of finance was. And so I'm sitting there, and I'm bringing there with me 3 other auditors, and they give us a little table, circular table, and this is what we carry. So this is my spare monitor, would sit here. This is my scanner, sits here, and there's 3 of us. Across from the director of finance on this little table. All of us realize quickly we're gonna run on one monitor. We're all gonna sit together, and in addition, when we communicate, how are we gonna have to do it? Through IM. This is not ideal, okay? We don't wanna be in your land and you don't wanna be in our land. Because otherwise, when my rookie auditor goes, I don't understand cash, he doesn't wanna do that when you're right there, okay? Just like you might not wanna hear, we might have a problem, when it might not be a problem yet because we're talking amongst ourselves. So you really wanna put us in a separate area with plenty of space, because otherwise we just get it your way and you probably are not happy with us either. So give us lots of space, makes us happy.
One more follow-up question. At what point do they let us know what documents they need prior to their arrival?
Should be weeks ahead.
Should be,
many
that should be
weeks.
happening now for the field work, for the financial audit field work. You should be getting schedules and getting your lists any day now, literally any day now. I've already scheduled my field work. We pretty much schedule the same week, the first full week in August every year. So I actually contact my auditor like in March, because I'm like, I want my week scheduled, so I know I can plan my summer around that. So you can certainly feel free to contact your auditor if you haven't heard from them and get them on the schedule, because they're happy to schedule too. And they do want to work around your schedule as much as possible. So
The only thing that ever gets tight is the fall fiscal stuff.
Yeah.
The fall fiscal, which is the enrollment and the fiscal guide, it's tight because DPI doesn't release that stuff till mid-October. I'm not kidding. We will call them up and be like, where's the reports? Where's the reports? And we can't move without them. And in addition, their stuff changes drastically year to year. So audit stuff doesn't really change that much. Now, we did have a new standard come out, but besides that, and we know about that years in advance, but the fact is that that's the only time it's ever tight, is that fall fiscal enrollment report, because we are stuck by the guidance of DPI when they're going to give it to us.
The one other thing to consider about scheduling your field work, try to be realistic when you think you'll have your reconciliations done. Because once an auditor gets out there and the client's not ready, then we got to kind of pull off, and then it gets a little more dicey and juggling to get rescheduled to come back out to your schools. So keep that in mind too when you're scheduling your initial field work with your auditor.
and be realistic, as to when you'll be ready. Don't try to cut it too early, because you really do need the time. And also, if you're like me, you'll probably never be ready, because I'm always trying to make it better, get it more ready. So I just keep working at it till the minute they arrive. So, but I have all of it done the week before when they want to start doing trial balances and things. And finally, when they're at your school for preliminary work and field work, do not be afraid to ask questions. Understand what they're doing, because everything you learn and understand, especially that first year, is only going to help you in subsequent years. That first year is going to be hard. It's going to be very time consuming. You're going to do a lot of work, but it's been done before, and the second year will be so much better. Get that first year over with. So, any questions? Okay.
So it's 9:20, 9:35. I say we just keep rolling. So now you're up to me. And by the way, you're gonna see a little bit different, and what I would ask for you too, is if you are following on the PowerPoints, you can write some notes, but don't get too far ahead of me. I like to have my PowerPoints are designed to show off a little and to keep you with me and not tied to them on the paper. I actually don't like to give them out. I like it to be a little bit of surprise. If you don't know who I am, like I said, I'm Ed Ritter, and I used to be a teacher, so you're gonna see a little bit different style because this is me. All right, so be prepared. And I do love questions, and I love audience participation, so I might call on you if I want you to talk. So, and I've already introduced myself. Everybody in the room, I wish I could introduce you on this line, but I can't. But anyway, so part 2 field work. And like I said, that's my whole deal is I'm in the field, I'm with you, here I am, this is how we get going. And sometimes many of you think of us as this. Okay, this is your auditor, oh my gosh, scary monster. And by the way, I've been in rooms where they actually feel that way. I go in there and like, I gotta talk to you, and they're like, oh my God, the auditor's gotta talk to me. All right, that is not how we want to be. We do not want to be the scary monster. We want to be working with you. So instead of that, I'm trying to get us like that. Okay, my goal is that we are the cute little puppy dog that comes in here to help you, not monster puppy dog. Okay, all right. If this is your auditor, let me know. Okay, because we will try to be this. Now, basics, like we were talking about before. It's June 30th. Everything's pivotal on that day. I don't care about June 20th. I don't care about January 1st. I care about how the whole year went to get me to this date. That is the key number. That's going to be on your audit report. That's everything that builds up to that is what's vitally important. All that preliminary stuff she just went over is basically getting you ready for that date. In addition to that, it's a moment in time. I am amazing for one moment. Okay? You're amazing all year long, and you better be, otherwise my moment in time will be wrong. Right? That's really weird, and I know it's odd, and it's also weird because when I explain this to like people, they're always like, so you work in the past for one day. Yeah, that's what I do. Okay? That doesn't mean you're not doing it right now, and it doesn't mean you're not doing it right in the forward. Did you do it right on that day? Okay? In addition, I might lead way into the past in order to make sure that day's right. If you have a lease that's been going on for 10 years, it better be right on June 30th, which means I get a check maybe 5 years ago. So if I start digging on you, it's only because I don't believe your 30th is right. And that's what your auditor's really doing. And I might tell a staff to come and chase down something. If you're a first-year school, you have a lot of history to get to because I need to make sure that the 6/30/18 is right for your balance sheet, your cash, your receivables, your PP&E. When did your building get built? When did you buy your land? Is your building depreciated? Is your van depreciated? What'd you buy the van for? It might have happened 8 years ago, but I need to know what it is. Because otherwise I don't know that date's right. That's why we fish. It's not because I want to. All right? Field work. Like she was saying, expectations. We're going to be out there for about a week. I'm going to bring 2 or 3 people with me. I'm going to bother you about all sorts of things. And it's going to be basically July through October. Also, could you bring my PBC list? So you're going to see many different variances. This is a version from me. I built this, so this is mine. Okay, you don't have it. See how there's a prelim tab of all these items? And you see how there's a fieldwork tab right here? All these items? Prelim and fieldwork are very different. Now, if you're a smaller school and I've been doing your audit for years, I might blend them. So you might only see us once. But if you're a first-year school, I'm going to give you the prelim of all these different items, and we're going to show up for a couple days and learn all about you and see, okay, where the risks are, what you do that's weird, or what you do that's great, or what you do that I'm like, oh boy. And then at field work, we're going to test it all like crazy. Expect those things. And by the way, like I said, these are all different. This is my version. If you saw a different auditor, even at Clifton Larson Allen, he might have it different, or she. That's just mine. Because they're all by tabs and they're all like little letter. That's just the way I like it. One of my team would do it this way because I tell them to. Okay. All right, back to our grid. So, like she was saying, Wi-Fi access, all that stuff, we kind of covered this. Same thing when we're in the field. We need to be able to access your system. Some of us will bring Verizon cards so we can log right into anywhere, but basically we still need all those same things as you saw with Lori. Now, what I did besides, I'm not going to go into everything of what a field work is because you're not an auditor and you probably don't care, but I want to go into a couple key things. First off, materiality. This you should care about. Because there's some things we don't care about and you shouldn't care about. There are many times I go into a school and they're like, Ed, it's off 10 cents, I don't know what. I don't care. Ed, it's off $5, I don't care. I only care about things that are material, things that make a difference, okay? Materiality is basically we take your numbers of revenues, assets, some metric, and we basically create a number that says what I care about at your school. Every auditor does this. This is not me, this is everybody. They do it, everybody does it. So when you come to me and say you're off $5 on something, I'm gonna be like, that's great. You can fix it if you want. I don't care. It's not because I'm like some wishy-washy auditor, it's because your number doesn't matter to me. It also tells me that if there's certain things like, let's say your PP&E is off $100, you should probably be able to say, why do we care? Because you shouldn't care as my auditor, because that's not going to be material. Now, the other thing too, and this is going to go into, oh, by the way, I'd like to throw myself in. So this is me 8 years ago. Do I look younger? I think I look younger. So when I showed these PowerPoints to my significant other, she was like, Ed, are you kidding me? You put your graduation picture in there? I said, yeah, because to explain materiality, what I want you to do is think about what's material to you. So this is me, and what I consider material is $100. Meaning, if I'm gonna spend $100 on something, I think about it. It's important to me. That's what your auditor's doing. Did you buy a van that's material? Is it worth 10 grand? Is it worth 30 grand? Is it worth $1,000 and I don't care? If it's $1,000, I probably won't test it. To me, in my life, if I'm gonna spend $100, I'm gonna look at it a little bit. What am I not gonna consider material? $5. I could spend $5 on anything. I can go right now to Starbucks and probably won't even get me a coffee. To me, $5 don't matter. Same thing with the $1,000 vehicle you bought. $1,000, don't care, don't even want to look at it. So don't gather up everything under the sun because you're probably wasting your time. We'll tell you what we want to look at. I've seen people gather all this stuff, pages and pages of documents of all these things they bought throughout the year, and I'm like, great, I'm sorry you did that. Because we're going to tell you what to you is material. And just to give you another comparison, because it differs. If you're a big school, obviously you're going to have more revenues or more assets, so thus your material is bigger. Just like if you're a billionaire like Bill Gates, he might what? Consider 10,000 to be material. I don't know what he would consider material actually. He's worth like 80 billion. But, you know what I mean? But he might consider immaterial something that he doesn't care about, maybe $1,000. So it's based on the size of your school. Okay, so if you're a little bitty 30-person school, we might care down to $1,000. But if you're a massive network of schools, we might not care until you hit like $20,000. That's just to give you a reference of what you're doing. And that's what we're doing. In addition, all those control forms you heard about. What do I do when I book this? Or how do I do cash? Or how do I do a bank rec? Or how do I do that? We're worried about the big thing right here, which is risk. Okay, whoops. Hit the wrong button. Risk is everything. Auditing is all about handling risk, managing risk. So what we do is we will test and basically address areas of risk at your school. And you might think things are risky and we don't. So, for example, what would you consider most risky things at schools? In my room. Go ahead. I'm gonna just ask. Steve, at your school, what is the thing that you would think would be the most risky to an auditor? Just a category.
Shared expenses between church and school.
Good. Shared expenses is something we will test. That's a good one. Well done. Okay, because what? We want to make sure they're separated properly. What counts, what doesn't. Allocations particularly, when we're allocating stuff. What's another one? Tim, what's a risky area that schools have usually?
Steve took mine. I was thinking donations.
Donations,
Got that right.
very good. In-kind donations, what you valued it at, how you did that. Or contributions of some kind. Some of you have big drives to build a building, to build big resources, to actually maybe fund your school. We care about those. When did you get the money? Is the money real? Is there any certain restrictions or rules on how you get the money? Do I have, if I get 100 grand, do I have to get another 100 grand to match it? Those are things we care about, big risk. What's the biggest thing you always think about with risk? How you're handling what? Cash. Cash is automatic risk. And by the way, some auditors would tell you that materiality does not matter when it comes to cash. Okay, it doesn't matter all the way down to a penny. Why? Because if you're handling cash poorly, it could be leaking out the door and you never even saw it. Big issues with cash, particularly sporting events, drives in classes, field trip stuff. How do you handle getting the money? It's always dangerous when it's just coming to me and I deposit it. Because then we're getting into this big control issue at most of your schools, almost all of them. Look at this, I do everything. That risk is segregation of duties. And you'll find this in most of your letters if you had an audit. Most of you have segregation of duties issues. Meaning what? You don't have enough people to break up the process. And when I think about that, I just think about your own school. How many people have enough where you get the cash from somebody, they record it, and deposit it? If you do all those things together, you have a problem. You have a segregation of duties issue. We want those all broken up for different people, different tasks, different individuals involved, so that way no one can walk off with the money.
3.
Preferably.
What are the 3?
It would be person who takes them, well, hold on. I got something for you. All right, so, save that question, Tim.
Yep.
If there are any questions on segregation duties, don't worry, it's coming. This is one of the biggest things that most auditors don't enjoy doing. And you might not like it either. It's called a walkthrough. If you've had an audit, you probably know about this when I talk about it. You'll have an auditor come up to you and say, let's see, I would love to see January's bank rec. And I want you to show me everything about it. The bank statement, the bank rec, who signed it, who approved it. We got that all from your control forms that Lori talked about. That's your process. Suppose it goes to the director of finance to approve it. And the bookkeeper is the one who does it. That's where we might learn that process. Now we're going to walk through it and see it. And we want proof that it really happened. It is not good enough to just show me a piece of paper. And here it is. Oh yeah, we did all that. I always tell my clients, guess what? You're not taking credit then for it. If you don't take credit for it, in my world, you didn't do it. Okay, I want to see a signature. I want to see an email. I want to see something to say, yes, it went from me, the bookkeeper, to Ashley, the director of finance.
Ed, we have a question
Go ahead.
that came through. So this is all understandable, but if you don't have the people, you don't have the people. So if the board is reviewing the cash flow beyond that, what do you suggest for these little tiny schools?
So for little tiny schools, the suggestion I would have is have a board member involved in signing off the disbursements, seeing them every month. Okay, they should come in and be able to review every disbursement that goes, or journal entries that are all done on a monthly basis. They should sign off on them. Someone in that board hopefully would be able to have financial experience to be able to do this to support the school. It's not going to get you out of a segregation of duties comment, but it will be someone else looking at it. Because watching the cash flow alone is a late and might very well be missed item. Because if you're already stealing, if it's already leaking out of the building, your cash flow isn't going to change, okay? Because it's already being taken out every month. So I want to involve them every month. And by the way, it's best to do it on a monthly basis. So it's not like, oh yeah, I got pages and pages and all looks good. Okay, it might be minimal enough then where I could actually look at them all. Or maybe the board approves every disbursement. We've seen that at some places where every one of them has to go to the board and be approved before it can be sent out. Question? No. Okay. So walkthroughs, back to this. So remember, we read all your stuff. We know how you do it. We're going to walk through it. And that's why she's walking. By the way, this looks like a nice area. I would enjoy this. But anyway, so we're going to walk through everything to make sure it's good. When we do walk through, we're trying to see if you're following what you say you do. And we're also seeing if we think it's wrong. If we think it's wrong, you're going to get, you know, you're doing great, but we'd really love to see this. And because I want to see how smart we are, even at home, and this is where I say follow my slides with me and not on your paper, watch, here we go. So my walkthrough example, and back to my segregation of duties. So here we go. This is Bob. Bob's your principal. Please stay with me and don't look at your pages. I'm sorry. This is where I wouldn't give you my slides if I could. Number 2, Ed the auditor. I threw myself in it, I'm sorry. Maybe that makes me egotistical. Number 3, Beth the teacher. You need to know the roles because we're going to walk through it together. So that's Bob the principal, that's Ed the bookkeeper, that's Beth the teacher. Here we are. Bob comes to Ed. You're the principal. You're coming to me and saying, I got this new person to hire. Okay? I'm the bookkeeper. I'm going to do that. I'm going to record it all for you. I'm your trustful person. I go, great. Where's the contract? Here it is. Oh, great. We have a signed contract. By the way, you better all have signed contracts. It's a DPI requirement. Otherwise, in the fall, we'll get you on the fiscal guide. So I take the contract. Why do I need the contract? Because I need to put your pay rate in there, right? So here I am. Ed, busy Ed, put your pay rate in, adds it to the payroll. We're good, right? Bob's like, oh, I'm going to approve your time card too for this new person. So what do we have for controls right now? Bob's the hirer. Can Ed hire? Bob got the signed contract, probably signed it himself with the person, correct? Ed then takes that signed contract to build it. Bob's going to approve a time card. That's good. Because if we're not approving time cards, or if we don't have a signed contract where it's like 24 payments equal over the year for a salary person, something like that, then you don't need an approver for the time card. But we have someone here approving. Now, here we go. Ed's going to enter the hours and the rate in the payroll system. I don't care if it's ADP. I don't care if it's paychecks. I don't care what it is. Doesn't matter to me. But they're entering it. Okay? Whatever one you use. How are we doing so far? Everybody with me? Anyone see a problem? Okay. Ed prints off a paper copy because we want it approved, right? So we'll print off a paper copy from, let's say, ADP. Thanks for the advertising. Congratulations, ADP. So I'm going to print this off. I'm going to take it over to Bob. You're not Bob. I'm going to take it over to Bob and say, Bob, look at this. Here it is. What do you think, Bob?
Looks great.
Oh, Bob loves it. All right, Bob approves it. Boom. Great. Ed's going to submit it into the payroll system. Here we have a control. We did, right? I took it over to Bob. Bob approved it, right? New employee receives a direct deposit, which is nice, no paper signing, from the payroll system. Is this a control environment? Do you like this? Would you agree with this in your school? Love it. I got the contract. I got back end direct deposit. I got Bob looking at it. Yay, yay, yay. Dina, what do you think?
Well,
Did you look ahead?
no, I didn't.
Good, good. What do you think?
I think if you only have 2 employees, it's kind of difficult to not do it that way.
Okay, so you think this is okay? This is good, right?
Well, if one is entering, one is double checking.
Right, so right, we got some controls, right?
Right.
And we do have some controls.
Right.
By the way, I've gone to places and we don't have these. It's just Ed going, you're gonna get paid $8 an hour, congratulations. Tough as your auditor.
We've got a couple of people responding. We have no control. There should be a third person for approval, or there should be a third person entering the payroll.
So, good question, good points. I'm gonna save that, I'm not gonna comment yet. Because I've got some thoughts here. Remember, we're saying thumbs up, thumbs down. Right now, we said it's okay. We have some questions out there in line. And by the way, what if we got nobody else, right? I'm gonna say we can't hire anybody else. We're limited on resources. You know, we gotta make money. We can't, actually, we just gotta break even. We're a school. If we hire someone for 40 grand, we're gonna be sunk. So back to this. Can Ed add and remove people from the payroll? Kimberly, can Ed add and remove people from the payroll?
I would say yes.
Well, let's check. What could he do? Ed adds new staff to the payroll. So Kimberly?
Yes.
Good. I agree with you. Okay, so Ed can add new people to payroll. Yes. Does Ed submit the payroll for payment?
Yes.
Good, he did. Congratulations, 2 for 2. How about this? Does Ed have to follow the contract? He saw it, he put it in. I gave a paper copy to Bob. Bob, here it is. Does he have to do it?
Someone online said yes.
No. Just because I gave him a paper copy doesn't mean I gave him the right stuff, right? How many frauds have occurred in America because I falsified documents? We had something like Enron. We had a whole accounting firm in Chicago go down for it because they believed them. Seeing a paper copy printed from the computer and given to him does not mean it's what I submit. Remember, I have total control of that machine. I can go in, hell, I could print it off, give it to him, take it and say, congratulations, go into the file for the auditor, and go back on the system and like, I think I'm gonna change it to what I want. He never saw what really was submitted. He saw a copy I printed off. Congratulations, Bob.
Thank you.
Yep. Go ahead.
But if he's double checking the payroll that you're submitting, he would hopefully find that error.
Correct, but only if he was looking at the computer system. How many times do we not do that? How many times do we sit and look at a paper thing and not really what was submitted? What really should happen is what? I enter it, and who has to submit it? Bob. There's actually nothing wrong with it just being 2 of us. The problem is that I'm not only entering it, I'm submitting. His review does nothing. It's fake. It's a pretend review. Congratulations, Bob. You did nothing. It looks really good, doesn't it? Got to look great in the story. And the biggest thing about this, and this isn't even adding to here, Bob doesn't even know how many employees I have on there. What if I made Ed 2 and put it in there? Or Ed's cousin in there? Or heck, Janelle, my significant other, is now on the payroll. It might not have been on Bob's payroll, but it's on Ed's payroll. Awesome. And by the way, how many times do I have to sneak it on the payroll? Well, we had an example there the board's going to review, right? Board's going to look at the cash flow. Well, hope to God the board is really closely looking, because if I can sneak $2,000 out every month, one time, how does the cash flow look every month from there? The same. Payroll looks the same. Even your auditor might miss it. Why? Because month to month, it looks the same. All I gotta do is sneak them on there once. Boom. Now they're forever there. And how many of you are looking at all the vendors you're paying? If I'm adding vendors, it doesn't even have to be a payroll person. It could be Ed's company. We pay a bill to Ed's company every month. Awesome. I give the money, I provide the check, I add the vendor. Awesome. I can sneak it out every month on you. And by the way, if I work here 30, Laurie, how many years do you work for Mesmer?
Oh, I've been a mess for 3.5 years.
3.5 years. How many years over the total of your life? Oh, 3.5 years just at Mesmer?
Yeah.
Okay, who's the longest employee at Mesmer? 20 years, 30 years?
Maintenance person.
Okay,
40 something.
40 years. What if I was your controller for 40 years? I don't gotta take a lot. Over a long period of time, I can take a lot. Even if I get 10 grand out a year, 40 years, that's 400K. Thank you for the bonus.
Well, and let me give you an example. Our maintenance person brings all of our packages at one of our sites up from the loading dock. And they usually come with the name of the person who ordered them. So they go straight off to a classroom or wherever. So if somebody was ordering things to a dummy vendor and was in cahoots with the maintenance person, he could just be taking it all home.
That would be a nice perk. Now, it's very hard for an auditor to fight collusion, but collusion is always kind of a tough one.
Everybody's required to turn the packing slips from their boxes.
Right.
Because then our business manager compares them to the purchase person. So we have a process to help.
And at least there's two people there. What I'm giving you an example of is Ed, the auditor, Ed, the bookkeeper, can do everything. All right, moving along. By the way, that was my little thief. I kind of jumped ahead of myself. But there's Ed stealing your money. Look at that. I don't even have to wear disguise on this one. All right. So that's an example of controls and why they're so important to you. And by the way, don't, when the auditor says you've got a control issue, try to figure out something to make it better. We're not there just to make your day bad. We're not just there to say you're wrong, wrong, wrong. We're actually trying to prevent the problem. Because fraud at your school is terrible. Fraud as a client of ours is terrible. We all want to avoid the problem. Okay? So typical risk areas like we were talking about, these are those areas that I was pointing out that are going to be high risk. We're going to test them. We're going to go after them. And we're going to confirm them. So cash, debt, contributions. These are things we talked about. Related party transactions. These are things when we're talking about my board member sits on our building, sits in our school, and he's also the construction worker who built the building. Our board member works at whatever, and we get a sweetheart deal for all of our sports equipment. These related party situations are trouble, and we're always going to look at them because we want to make sure it's a fair deal. If you get something for an incredibly cheap deal, congratulations, but the auditor is not going to accept that. You can't get something for $1 because Steve sits on the board and loves my school. Okay? We want these valued at what they really are. Okay? Payroll, like I said, we already talked about. PP&E is always a high-risk item because we want to make sure it's valued and depreciating properly. But these are just some of them. There are many others.
Ed, what's PPE?
Property, plant, and equipment. So buildings, cars, anything that's going to be something that you would depreciate over time. Okay? All right. And like we talked about earlier, we're going to confirm a lot of these. Your typical confirmations are going to be the cash, the debt, the pledges. That was already pointed out. This is just bringing us all back into this. When we're out there, we're going to check these through confirmations. Why? Because just because you show me a doc doesn't make me comfortable. It makes me much more comfortable when I get it right from the bank. All right, sampling. Now, if we tried to test everything when we're on site, it would take forever. So what we do is we do a sample. And we're going to ask for your populations. The biggest way to get your auditor off your back is give him full GL detail when he gets there, or even before that. If you can give him full GL detail for the whole year, I don't need to come after you and say, what's in this account? I can look it up myself. And your auditor should do that. In addition, he's going to want to know the whole population of contributions, like all you got, or all the different things you have, so we can get a population to sample. These are typical things we would sample, meaning we're gonna pull like 10 items, maybe 25. If we have problems, we might have to sample more. If we have too many problems, we're gonna possibly say that that's just wrong. And we're gonna have to make adjustments. With your approval, of course. But the biggest point is, when we're testing these things, it's just to see what the whole population looks like. This is a way, it's all statistically done, so that if we sample this many, it basically tells us how many are in the whole population. Okay? Big thing, remember that materiality piece? What's important? Material items will always be pulled. So if your materiality is 10 grand, we're gonna pull everything above 10 grand no matter what. That means a contribution above 10 grand will always get pulled, and then we'll pull some small ones to finish the sample. That's how it works. Okay? Big one major thing we also do is lower risk areas. We'll do analytics, which is comparing year over year. So we'll look at an expense account. Why did it jump 10 grand? And we'll come to you and say, how come your expense for, let's say, bookkeeper expense jumped 10 grand? Why did your audit program go up this much? Why did your cleaning services go up triple? We're trying to see what's weird. That's what we're doing here. This is low risk area. Remember, high risk, confirmation, sample. Low risk, analyze year over year.
And
Yes.
so just a comment with that. So let's say that example that you posed where the bookkeeper expense went up by 10,000 and you are questioning that because it met your materiality threshold. The school doesn't need to be fearful at that moment. All they need to do is say, oh, you know, we hired Bob for another, he used to be part-time now, or three-quarter time, and now he's full-time, thus his salary went up 10,000. Something as simple as that is a reasonable explanation.
Absolutely,
correct?
and then we'll probably want to see the contract. We'll probably want to see that he went from 20 hours to 40. Or if you tell me, oh yeah, we had the roof leak, and we had so much more maintenance this year, we'll just look for some invoices. We just need something to substantiate what you said. It's not good enough for you just to tell me that's why. Because yeah, you could tell me unicorns ran through and they poked holes in the ceiling with their big horn. And I'd be like, huh, that's really cool. That's not a very good auditor. All right. This is a problem for most of us. And a problem I see in almost all of my audits. It's very typical. Errors are all the time. And this is something kind of accounting. So kind of accountant kind of thing. So if you're like, oh my God, Ed's gonna get into more accounting, yes. But this is something that cannot happen, will always cause errors, and we will try to adjust for it. A lot of us work in a cash world, meaning I paid it, that's expense, I bought it, that's good enough, that's when I'm gonna count it. In accounting world, we don't deal cash-wise, we deal with activity-wise. When the activity has occurred, when you owe the money, when it's really happening. Many of us work in a cash world where when the cash leaves the door, that's the only time I count it. This is what the DPI and audit standards require. Not when the money left, but when it was owed, when the obligation occurred, when it's really in accounting world existing. We see huge issues in cutoff. What I mean by cutoff is end of the year here, what's on what side of the border? Is it an 18 item? Is it a 19 item? When did the obligation occur? And we have an example for you, of course. Sorry. So, you order and pay a $1,200 by ACH, and I would ask first off, who approved the ACH? Who can send the ACH? A lot of times it's just your director of finance can send it off right away, which means they can send one to anyone, but that's a different control issue. For a full year subscription for IT services on June 28th, that starts July 1st. So you paid it June 28th for a whole year for $1,200. cash world, here we go. What do you record in cash accounting on June 28th? You debit your subscription, credit your cash, right? That's the expense, there's the cash. You're like, oh my God, he's showing me entries. Oh, you know what's funny? When I was a teacher, I had never taken an accounting course. Only when I went back. I always thought it was boring. But here I am. Now, $1,200, cash, done, right? What do you record on July 1st when it happened? Nothing. Right? It's over. It's done. Right? We approve. How many people in my room, because I can't see people online, agree with this entry? This is the way I should do it. I'm money.
Cash.
Cash basis? Yes. How about accrual basis? Some people are like, whatever, Ed, I just recorded. That's what I would have done prior to going back to school. I'd be like, dude, that's fine. So this is what many people will do who are not accounting people. This is not okay according to DPI. And by the way, I have a question for you. A, when would the full $1,200 of expense be recorded? A, June 28th, we've already agreed, no. July 1st, remember it's gonna start then. Or none of the above. By the way, it's only, you got a 33% shot here. Oh yeah, now you're 50-50. Shoot. In college, I would have considered that a win. If I always got it to 50-50, I was like, dude, I'm gonna do well. I hope we're all thinking the correct answer is C. The expense would be recorded at the rate of $100 a month over the entire length of the subscription. Harder question, and I'm going to use my audience and someone who I haven't used yet. David, what was the $1,200 that you paid June 28th? What would we call that in an accounting world? What should you recorded the debit to? You had to record the credit to cash because cash left the building, right?
Right.
What's the debit?
Is that an account payable?
We paid it. Good try. Steve, next to. Okay. Well done. It's a prepaid. The correct answer was this. You bought it, you paid for it, but you haven't used any of it, right? So you prepaid for the service. This is actually an asset to you. It's something you haven't used. It's something that's coming for you. You've got it ahead. Cash has to go out the door. This is correct. What you would be recording when July 30th hit, when you're done with the whole month of using it, is the $100 you've used up. It hits the prepaid, brings it down because you don't have as much asset anymore, and in turn, the expense goes up for it. This is accrual accounting. This is what typically we're not very good at. If you are good at this, rock star your school. Yes.
So Ed, for the schools here working with DPI, and they are trying to monitor the amount of expenses they have on a given year, and you're approaching this June 30th deadline, this example of this prepaid expense would not count towards your eligible expense.
Correct.
For the current year that you're talking about. It would be pushed forward to your next year. So if you're managing that reserve and all that goes into that, this is one of those tricky little things. So if you buy $50,000 worth of computers and they are really a prepaid expense for next fall,
Like buying books ahead.
right, you cannot count those in your eligible expense for this year.
Correct. The trick here also, this would double hurt you. Let's say we change the example. Let's say you bought $120,000 of books because you want to rack up your expenses and push, and this is for the reserve schedule, which don't worry, Jason is going to get deep into this. But you want to push up your expenses so that way you look better and you're spending more and you have less reserve. If anyone doesn't know this, we're going to get into this more, but I'm cheating ahead. So my reserve is, I'm trying to bring it down because I don't want to have this reserve balance and I want to make it look like it's all used up. I'm gonna buy these $120,000. This would double hurt you. This would be the worst thing you could do. Why? Because it is a prepay. And if you have a reserve balance, what do you have to support it?
Cash.
Cash. And what left your door? Cash. So you used up the cash, so it's not there to support your reserve, and you got no benefit to the expense because it's for next year. Don't do this if you're trying to build up enough support to get rid of your reserve. You see what I'm saying here, folks? This would be the worst decision. You need something that is expensed immediately, or you need the cash. Okay? And then, like I say, we're going to get into this reserve schedule, but that's a good point. That's how this all plays together. Yes, sir.
Does DPI or you as an auditor require you to be on an accrual basis on a monthly basis?
No. You only have to be accrual basis by the end of the year.
Okay, so your entry could be $1,200 for July.
You could, yes. Yeah. We wouldn't track you.
Or you could even wait till June 30th to reverse out the prior year, whatever.
Yes. And there are schools that literally do that. They go cash all year long, and when we walk in the door, they have entries to true it up. Now, this is before year end. The biggest error that I see consistently is stuff that you already bought, you haven't paid yet, and now jumps into next year. So in July, in August, all these expenses you're sending out checks for, right? You're sending all these payments out, but when did you really owe the money? Back in June, back in May. Those need to be on your books as expenses for the prior year. That's where we find errors all the time. And what we do when we're doing that is we test all those payments after year end. If you've been audited, your auditor is probably come in and said, I want to see everything paid, cash, whatever, out of your account from July 1st through maybe the end of August, after year end. We're doing that to hunt where you missed. We're trying to figure out what you paid for after year end, but you owed it before year end, to make sure your accrual numbers and AP numbers are right.
And again, that's a blessing, because if they find things that you didn't accrue for, that's going to only increase the cost of education for that previous year, which probably is going to benefit you if you have a reserve.
And your auditor probably will also ask for any unpaid or unprocessed invoices as of the day of field work as well.
Oh, you can't look at that one. Okay. Good. So anyway, that's how that'll, and that's, like I said, a big topic. That's why I hit on it. I don't want to get into everything. Okay. IT testing, real quick, because I'm kind of going long. I tend to do that. I'm sorry. IT testing, we're going to look into your IT testing. Why? We're looking for segregation of duties. Who is your person who runs all the IT? Is it someone different than your finance person? Does someone have all rights to everything in IT and also rights to your general ledger? We don't like those. We want them split apart. Okay? Do you remove old employees? Because you fired me and now I'm angry as heck. And I'm going to go into your IT system and wreck you. You better remove my access. Because it's very embarrassing when I post all inappropriate pictures all over your stuff. Okay? That's what we're going to check to see if you remove people. On top of that, a couple other things, and these are big topics, and like I said, moving a little quickly because I'm running long. Legal issues. We're looking for liabilities. Are you being sued? Is there something out there? We're going to look at every single one of them. There's no materiality here, because if I miss one invoice, that could be the one that says I'm suing you for $1 million. And I want the detail. Why? Because I need to read what the heck's going on. And if I come to you and say, dude, it looks like you're getting sued, I might ask you, and I might ask a board member. Leases, big issue here. And by the way, there's all these lease changes that are coming through, and your auditors will talk to you about that, because the lease guidance has changed. There used to be 2 versions. There used to be a capital lease, and then there was, the other version of lease, which you didn't have to put in your books. Okay, this is all changing, but leases are important because they basically tell you what you're owing into the future, and that'll be a footnote. Okay? And like we talked about before, and this is a big thing, and you're going to see a lot of testing, You guys get a ton of stuff for typically people donating for scholarships, people donating for building campaigns. These things we're gonna test like crazy. And we do it on both sides. Because here, if I'm giving to your school at Grace, right? I'm gonna give you 800K and I want it going to all these kids, or I want it to go to fix the building. It really is really problematic when you don't use it for that. And you all of a sudden use it to win the state championship in football. Congratulations, we won the football team. We have the best facilities ever for football. When I wanted to go to Bobby's school so that Bobby could go and Susie could go to school at your school and learn and be smart. So we will not only test that you got the money, but we'll also test that you used it for what you wanted from the donor. Not from what you wanted, but the donor's wishes. We will look at all of them. Okay? It needs to be, this is a big testing area, an area that will drive like crazy, and if you've been audited, you know we will look at it. All right? Last thing, and by the way, if you have a little history to you, anybody know where this comes from? I grew up playing it like crazy. I was really good at Mike Tyson's Punch-Out. Nintendo.
Yep.
So a couple things I will tell you that you can control, and I would tell you to control the time. I'll be right there with that. If you have an auditor and you love your auditor, tell them to keep your auditor on your job. Audit firms want you to be happy. They want you to stay as a client. If you hate your auditor and you think your auditor is terrible, and it's maybe Ashley's just jumped on the job and she's just a jerk when she's on the job, tell the lead auditor, tell Jason Rassi, and he will remove her and put someone else on your job. You have that control. I have been told, don't bring her back. Don't bring him back. And guess what? They're not back. If you like them, keep them. The other thing too on this, you control their hours, their site. If you have a doctor's appointment at 3 o'clock and you need them out that day, get them out. They will leave. We will abide by whatever time you have. Just notice though, that if you're always leaving at 2 o'clock, we might be there for 2 weeks. Okay, but you control their world. You can make the difference. And one last thing on this. And this is a little background into the audit world. Jason might cringe that I'm telling you this. If your audit team changes rapidly, crazy every year, tell them you don't like that. Because it's awful. Why? Because you got to teach them all about your stuff every year. Oh my God, yeah, that's how we do it. Yep, that's how we do that, Ed. When you have an auditor that's been there 3-4 years, they already know you, so it's kind of like a little better situation. And I really believe they can audit you better because they know you. They're not learning all of them. So try to, if you really want your teams to stay, now it's not always possible because sometimes people quit. It is public accounting. But you have some control to say, hey, Jason, love my audit team. Keep them there as much as possible. And he will do that for you because he wants you happy. It makes your life easier because then I'm not sitting there going, what? You got a locker room? What? Yes.
We have a question on this point. What if our lead auditors keep leaving?
Now I would ask why. If your lead auditor continues to leave, is it because they're quitting or because they're being changed over? I would reach out to your partner or your principal or wherever you're working with and say, I would like to keep my lead auditor if they're not quitting because we are comfortable with them and we want that consistency. If you can't continue to get that and they continue to ditch you, find a new audit firm.
And then we have a question.
Even if it's mine. So,
We have
yes.
another question, going back just a moment to the previous slide. What kind of paperwork do we need from a donor to determine the intent of the donation? Or would just word of mouth or a check memo be sufficient?
Check memo is big. We will accept a check memo. Word of mouth is not good enough. If we do not have any more documentation than word of mouth, we might actually send out confirmations to them and say, please tell me what you wanted for it. You should have a letter. It'd be great if they get a letter, a signed letter, particularly big dollars. If I'm kicking you 100 grand, you should have a letter that you both sign saying, I wanted it for this. Okay? A letter, or if it's over a multi-year payment plan, I'm gonna get 100 grand this year, 100 grand next year. Those should all be signed situations. We wanna see those, you should have a copy of that. Okay? But also the memo obviously is valuable. We will use that. Anything else?
Nope, but I think we're out of time for that.
Take a 5-minute break. Thank you. I'm done.
All right, we are good to
All
go.
right, so part 3 is kind of the deliverables, which are those financial statements, multiple letters, and then just some general wrap-up things. A couple of things to bridge the gap when the staff people leave your field. It's not quite done yet. They go back to the office and they kind of work on open work papers, cleaning up things, preparing the drafts of the financial statements, and then a partner at the firm has to review the entire file. So don't be surprised if you get some other questions after they leave the field the first time and maybe ask for additional documentation. That's quite common, especially in the first couple of years. Financial audit. Required to be completed annually and submitted to the DPI by October 15th of each year. It's also required to be in accordance with generally accepted accounting principles. There are a few exceptions. We'll go over a couple of those in a few slides from now. School has an option to prepare a modified financial audit if you receive under $100,000 from the DPI in a given year. I'm going to skip over that if you guys have questions. The reason we skip over it, the way it's worded right now, it actually doesn't truly save the auditors any time. So the cost is going to be roughly the same. Required financial statements. This presentation is kind of almost geared to a school in the program for the first year. There's actually a 4th statement now too, which is going to be common practice, which is from the Clarity Standard, which is a new accounting standard Ed briefly touched on that impacts nonprofits for this year. So first year schools need to do a comparative statement of financial position. So that'd be June 30th of 19, and then going back to June 30th of 18. Just from the accrual standpoint, which I kind of went over for timing purposes. DPI wants to ensure your statement of activities only encompasses your revenue and expenses for that fiscal year in the choice program that goes into your reserve calculation. Then first year you need a statement of activities, statement of cash flow, and then a new statement this year, which can either be a statement, which our firm has decided to do, or be in the footnotes. Full disclosure is the statement of functional expenses, and we'll go over that in a little bit as well. All right, here's generally the components of a standard financial statement. You might see some other supplemental information in yours depending on what your organization looks like. I break it down into 4 parts really. First one being the auditor's report. Then the next group are the statements. I consider that part 2. The notes to the financial statements, which give more in-depth analysis of the numbers on the statements previously shown. And then the reserve schedules, which are the DPI required schedules for the financial statements. Independent auditor's report contains an expression of an opinion on the financial statements. There are 4 types of opinions. First one is the unqualified, which is a clean auditor's report. Auditor has concluded that the financial statements present fairly in accordance with GAAP. A qualified opinion states the financial statements are fairly presented with the exception of a specified area. Then you have to add a paragraph in explaining what that departure from GAAP was and the impact on the financial statements if determinable. The bottom 2 are 2 that DPI will not accept. And actually the qualified DPI will only accept a couple modifications. If there's other ones, your auditor has to discuss that with DPI because they do allow other modifications on a school specific situation. But you have to get that approved before you submit your financial statements, otherwise they will not accept them.
And just so you know, folks, just because you get like like when we're talking about segregation of duties, that doesn't mean you're going to end up with an adverse or a qualified, you know what I mean? It's just saying that you have some segregation of duties issues. So sometimes there'll be things that come up there, but they still have an unqualified opinion on the thing. So
yeah, those segregation of duties ones generally fall in the management letter. That is also a deliverable to the board of the organization. So an adverse opinion, pretty much, based on what we've seen out there, looking at the documentation, the financial statements would be misrepresented and misstated and do not accurately reflect the financial position. I have personally never issued one of these, thankfully. and it's kind of rare. Disclaimer is even more rare. Get out there and there is no support for any of the balances, any of the transactions, the documentation's gone. That's when the disclaimer of opinion would come in. So hopefully you guys don't run into those and work with your auditor at least to get up into the qualified section. So here's an example of an unqualified opinion. It's opinion on the financial statements referred to above, present fairly. First year schools, there's your comparable or comparative statement of financial position, and then just 1 year of net assets and cash flows. Your second year in the program, everything will be plural in that first sentence. Qualified opinion, one of the most common, and it's probably in over half the schools we audit, is the capitalization of your property, plant, and equipment. A lot of these schools are traditionally older. Might have bought the building in 1970, could have done a building improvement in 1970. No one kept records back then. Even from the equipment standpoint, places are generally on the cash basis of accounting, computers, whiteboard, smart boards, all that stuff. Historic costs, which is required to be recorded under GAAP, may not exist or might not be cost beneficial to go track that stuff down. Then we just plunk this in. We have had occasions where they did have a major building improvement. So we kind of said prior to this date, with the exception of this addition, these things are not in your financial statements. Downside is, if there was something you bought 5 years ago and you knew you assigned it a 10-year life on your capitalization policy, you'd be able to recoup some of that cost through your reserve schedule. So it's a matter of how much time and effort you guys want into trying to find those invoices. So the qualified opinion, the only thing that really changes is that middle part of that first sentence with the except for the omission of the information mentioned in the preceding paragraph. Everything else is in fairly compliant with GAAP.
Jason, I got a question.
Yes. Oh, I'm sorry.
Jason, for a first year school, so you have 1 year of your income statement.
Yep.
But you have 2 years of your balance sheet.
Correct.
So you have to, you do those at the same time at the end of the 2019? How would you recommend doing that?
What I generally try to do, time prohibitive, because as you mentioned, the full-time work is the smallest condensed area, is we try to educate the schools on what the accruals are and kind of what to look for, and then they can start, going back to June 30th of 18. The sooner you do it, the easier it's going to be for you, because there's less activity. You got to unwind to get to it. But sometimes it happens in June, sometimes it happens in July. So cash is hopefully reconciled. It's just a matter of the AR, the accrued payroll, the payables, and stuff like that.
And we'll send the conference out together typically. So we might wait to the end and send all the conference out for both years, just because you're hitting them both anyway. But I mean, we could do them right now. Like we would do a balance sheet for last year right now, if you just got the school. It all depends.
So once again, one of the modifications that's allowed per statute is the capital assets purchased in previous years. Next one I haven't ran across yet, but it's including post-retirement benefits based on the actual cost of the benefits for that year. And then, as I mentioned earlier, the modification needs to be specifically approved. Yeah.
Got a question from online. Just to be sure, if we are starting the program this fall, then we'll need to do 2-year balance sheet for 1920 compared to 1819, correct?
Yes. The one modification I have gotten approved specifically is we knew a school wasn't going to open up in the future fiscal year. So technically they were supposed to follow the going concern basis of accounting, and they would adjust some of the balance sheet stuff in the income statement. And it didn't make sense for the reserve schedule. So DPI allowed us on that one-time exception to not present it under that method. Have you run across any other modifications that they've accepted?
No.
Can you flip to the financial statements, please?
Sure. Was that item 7?
Yes.
Okay. Just one minute here.
Couple of things. This is just a template of what a standard financial statement looks like. A lot of firms use PPC. That's where a lot of the disclosures come from. But here's an example of an auditor's report. It kind of spells out management's responsibilities of the financial statements, the auditor's responsibilities, and then there's your basis for qualified opinion. These bottom 2 paragraphs, the bottom one is only if you're in the SNSP program, and these come verbatim from DPI. One thing I want to touch on is the date of the audit. That is not the date you last see Ed out at your school. It's the date after generally the partner reviews the file and feels comfortable signing the opinion that everything has been documented adequately and can support the numbers on them. This date is also important because it needs to mirror the date in the subsequent management letters and the management representation letter we're going to go over. In addition, subsequent events that Ed mentioned, that's when the auditor has to review certain items like related parties, amended lines of credit, etc. All right, can we go back to the other one, please?
The PowerPoint?
Yeah.
Sure.
All right, so the first statement in the part 2 of the financial statements is a statement of financial position. This is Ed's one day of glory. This is on a given day, the financial statements of your assets, liabilities, and net assets of the school. So it would be your end of your fiscal year, so June 30th of every year. This is the numbers that are represented on this statement. Components of them, there's 3 components: assets, which are resources owned by a school, which have a future economic value that can be determined and expressed in dollars. Examples are cash, investments, receivables, promises to give, property, plant, and equipment, inventory. Then the next 2 sections, some of these next 2 need to agree to your assets or your balance sheet won't balance. Is your liabilities, which are legal financial obligations that arise during the ordinary course of business. Examples include accounts payroll, debt, line of credit balances, deferred tuition if you start collecting for next school year for registration fees, etc., and then accrued payroll. Then the last category is your net assets, which is a net worth of your school, and that new clarity standard 2016-14. I don't need to know that anymore. It'll be in the footnotes as well. Rebranded the net assets section. There's only 2 categories now. They're without donor restrictions. That's your old unrestricted net assets if you've had audits done before in the past. They are comprised of undesignated and board designations. Some organizations, some boards designate certain money for endowments or for future capital improvements. Those fall under that category. And then now there's only a second category called with donor restrictions. The perpetual in nature one, that's the old permanently restricted, if you've seen those before. And then purpose restriction, that goes to Ed's thing. If someone gives you $800,000 for building expansion, that's purpose restriction until you actually build the building. Time restriction for future periods. If you're fortunate enough to get $100,000 donation over 5 years for just general education or curriculum, we got to show that until you receive the cash for it. And then underwater endowments, we won't go on over. It's just if you have permanently restricted endowment funds and it's underwater from the time the donors gave you the money, it filters into that. Can you switch over to the financial statements, please? So here's an example of a statement of financial position. Once again, on top there, very top row, it says June 30th. That's that one day in time. Classified statement of financial position is generally the ones that are presented. So certain things need to be broken out between long-term and current. Notes payable is probably your most common one. You have amortization schedules of principal repayments. Current, by the definition, is within 12 months of the date of the statement of financial position. Everything else gets dumped down into the non-current portion. And as you can see, there's the breakdown of the new net asset categories. All right, thank you. Next statement is a statement of activities. This just presents the school's revenue and expenses, and unlike a one date and time, it's actually for your entire fiscal year, so July 1st to June 30th. And it's resulting of your income and expenses occurred during the current fiscal year. Yes.
I have a quick question from online. If we need to add an income expense account, our charts of accounts, do we need to let the auditor know prior to field work?
No, generally when we get a trial balance, we just get it. In first year schools, none of them are going to be grouped. But once we get a new chart of accounts, if it's self-explanatory, like you added a new salary account for a position or a title, But if we're unsure of where you want it in your financial statements, then we just, ask the question, here are the groupings you have, where do you want it to see it? So just general revenues are on the top of these, on this statement. Examples of revenue are pretty straightforward. Certain revenues, according to the auditing standards, need to be shown net in the revenue section. They're fundraising, script, special events, and investment income. Investment income is new as part of the clarity standards as well. The netting for the special events and fundraising is generally your direct fundraising expenses, like if you have a golf outing, the price you pay for the golf course, prices of the meals, and that's also part of the reserve schedule we'll get to in the at the end of the presentation. Script, you'd be netting it versus your cost of goods sold. You had to purchase the gift cards for $20, you sold them for $22. You just got to show that stuff net up in the statement or revenue section. Another component are the in-kind revenues, which Ed briefly discussed. Those are generally a separate category on your statement of activities, and it's just donated goods or services. The most common ones I see at schools are Title I teachers, and then the donated commodities if you're part of the DPI food program. The way to find out if you do get those from DPI, if you get your monthly check and you see that negative amount coming out for a handling charge, that means you're receiving some free donated commodities. Expenses, this is kind of a new thing this year. They're going to be summarized from the statement of functional expenses. You'll see program services, and then you'll see the two supporting services for management general and fundraising. Can you go to the statement of activities real quick? So this is an optional presentation for the without donor restriction for the board designated. That can be truncated into the one column. But there you can see all the revenues on top, and then you can see some of the netting for the script and the fundraising. And then getting down to the expense section, there's your different categories based on functional presentation. Right, thank you.
So it's optional to split those into 3 columns. Is that what you're saying?
You have to show the without donor restriction and with donor restriction. Those are the 2 columns. If you don't have with donor restriction at all, you won't see that. It'll be hidden and it'll only be 1 column. But the 2 in this presentation, yes, you can collapse those 2 without donor restriction into 1. So the statement of functional expenses, this is a new requirement now for all nonprofits. It either has to be all in one place in the footnotes, which is not the easiest thing to work with Word. That's why we put it in as an Excel document as part of the statements. The 3 categories are your program services. Any activity that fulfills the purpose of your school or mission is defined as program services, i.e. education. Yeah.
Another online question. We have a couple coming in. What if previously in our accounting system fundraising was listed as an income and then expense?
Oh, we can group it on the financial statement, so that's fine the way it is, because then you can just show it as that separate negative line on the statement of activities.
Okay. And then the next follow-up question, this report layout will be created by the auditor, correct?
Yes and no. Yes, because we generally assist with drafting the financial statements, but according to our standards, the financial statements are technically the schools, their management of the schools. The only thing that really is the auditors is the audit opinion, that first 2 pages you saw. So once we get into more of the management letter and the assistance of drafting it, it kind of falls in the buckets on there. But yes, it does generally come from the auditor. They will approve the draft before we can finalize the audit.
But you are taking our trial balance. Sorry. But you're taking our trial balance and dumping into your software to combine, account, and present. Is what you meant?
Correct. And if they want to, we call it a report trial balance. Assuming yours is very similar. That's how we group the accounts, and then you'll see the line on the financial statements. They're more than welcome to ask for it. They should ask for it to see how the auditor has grouped the accounts for the financial statements. The next 2 categories are called supporting service areas generally. Management in general, these are expenses not identifiable by a single program or activity. However, there are expenses that are indispensable to the conduct of activities of the school. This is a little trickier one because, you know, it's more of an allocation, like a principal's time. You know, the school might think, well, he's here for the program, he's here for the education, but they also do, you know, overseeing the organization as a whole and how it's ran. So you somehow come up with a percentage to allocate some of that person's time and benefits to management in general. Fundraising, these are activities undertaken to induce contributions to your school. So if you have a grant writer or if your CFO or controller writes for grants proposals, solicits contributions, organizes fundraising events, percentage of that person's time should be dumped into this column. Allocation between these categories are an estimate by the school because once again, they're the school's financial statements. The auditor either can provide you like what the schedule looks like as a whole, and then has the columns on there, and then, you know, can assist management in coming up with those percentages. And then we just have to determine if those percentages are reasonable. Things I look for, you know, like the salary column, that's your biggest number. You might have to break that out going, here's the principal's total compensation, here's the administrative to back into the net for your teachers, because those should be 100% program. Is, you know, anytime you get into occupancy, then it's almost kind of square footage. And if you have occupancy at 80, 15, 5, then your utility should kind of follow that. So anything that shows up in the natural categories. You flip to the financials, please.
Mm-hmm.
All right, so there's your columns across the top. That's the functional presentation. The left-hand column, which is the natural categories, which is also required now. This might look a lot more like your chart of accounts to the left-hand side there. And there's just major categories. This is just a template. You know, if you want to truncate that a little bit more, just let your auditor know what you want to see there. And they can make that work for you guys. Third part of the financial statements are the notes to the financial statements, also referred to as the footnotes. They provide additional information pertaining to the school's operations and financial position and are considered an integral part of the financial statements. They're also required for full disclosure. If you guys really want to get bored and fall asleep one night, ask your auditor for the disclosure checklist. It's about, what, 80 pages, give or take. That's what our standards say needs to be disclosed. Not all schools have everything, but that's how long the document is. But remember, we're here to help you and put what you need in there. Generally speaking, first part of the footnotes go over the policies of the organization. How do you record accounts receivable? How do you record contributions? What do you guys determine to be cash and equivalents? And then after that, it kind of goes breaking down into your statement of financial position accounts a little bit more, like your inventory. You got to say what it comprises of, stuff like that. We're just kind of going to go over a few of the changes from previous one for schools that have had an audit done based on the clarity standards. But if you have any questions, feel free to ask them. Well, here's the statement of cash flow. Sorry, this is the last statement. This is just the ins and outs of the cash of the organization for the fiscal period. It pretty much all formulas from the statement of financial position. So it's not a lot you guys got to worry about, except for making sure that cash at the end of the year equals your cash on the statement of financial position. So once again, with the clarity standard, we'll go down to the presentation. Here's the definitions of, where'd they go? Oh, up a little bit.
Okay.
There we go.
Okay.
There's the two new categories. You might have seen 3 categories there in the past. This is a new AICPA example of how to spell these out for organizations. Functional allocation of expenses, that comes off your statement of functional expenses between the natural categories. Just gives an explanation of how some of those things were allocated between the columns. There's a new accounting pronouncement, bunch of accounting language that you don't need to know about necessarily, but it needs to be in your financial statements for the year. This is another new fun footnote for us. Number 3, liquidity and availability. Part of the same clarity standards, requires all nonprofits to assess their financial assets and compare that to show how much financial assets they have to meet general obligations or expenditures within a year, and then other contractual obligations as well. So you start with your financial assets, which are generally your cash and investments accounts, accounts receivable. Then you're required to back out certain things that you can't contractually spend on general obligations, which would be your donor restrictions and board designations. This next paragraph here, they gave us leeway of putting whatever we want in here. So that negative $57,000 doesn't look very good to a reader of how you're going to pay your general expenditures over the next year, does it? So they allow us to add whatever we want in here. And one of the common ones is when they operate under a balanced budget, they're going to get more revenues coming in. They're cognizant of it. They manage, watch their cash flow. And then also you can use, if you have a line of credit for availability, you can draw on that to make payments as they become due. And then for board designations, generally in the board minutes somewhere, the board can release their designation at any time. That's why they show up in the without donor restriction column, and they can use those resources for general expenditures if an organization needs them. And then here's just some more breakout of the categories as required. Just a composition of both of them. This one down here, they have money for leasehold improvements that they got to spend for future years. There are a few additional footnotes that DPI makes us use if your school has these situations. There's an example of one on there. It's the minority of schools have it, so we won't go over that today. All right, the management letter. This covers two standards. We issue it in one letter. 115 and 114 is what they're called. 115 is, remember all that fun stuff Ed sat down with you on and went over how you process things, and he looked at walkthroughs and was bugging you all day long. That is one of the things that we get out of that as auditors is consideration for this management letter. Things that we can point out to the board of the organization that they can improve efficiency-wise or to mitigate their risks. It's a letter reporting to the board of the organization. We send drafts to the school beforehand anyway. And there's different categories or standards require us to determine if they fall into, which are significant deficiencies or material weaknesses or other. First year schools, it's important this does not go to DPI. It only is required to go to DPI your second year in the program. And then it would be the following fall, anything that's in that management letter needs to be addressed in your fiscal practices and internal controls report. So the 115 letter, here are the buckets that we got to put them in. Definitions are there. 3 areas that every auditor needs to address are the segregation of duties, financial statement prep, and journal entries. Segregation of duties, don't be surprised if it shows up on your letter and the significant deficiencies or material weakness, just because you guys are small and it's a cost benefit. You want to add a couple people to not have this comment in there. I guess that's a board decision. Financial statement prep, you rely on our expertise to draft them for you, so then we have to address it here and what area it falls under. Generally, if the organization has a CPA on the board, that kind of helps alleviate having that comment in here. And then journal entries. These are entries that we would have to make through the course of our field work and wrap up from the initial trial balance you gave us to getting to the report numbers. We have to look at that for either the number of journal entries or the materiality of them to determine which one of these buckets they go into. Other matters would be like the payroll example Ed went through. That's where we would identify certain things that you guys can look at to improve on. It's also an information area for auditors to put new accounting pronouncements that may be coming in the future to make you guys aware of it ahead of time. 2 that are coming out is revenue recognition, which shouldn't impact most of you guys unless you get a lot of contributions and grants. Then the lease standards 2 years out. Do I have that right? Revenue next year, at least 2 years. All right. And then the 114 letter, this is just almost boilerplate wording from our PPC document, just required communication to the board of any organization we audit, for profit, nonprofits, it doesn't matter. The areas in there to look for are your estimates that are used in preparing your financial statements. You'll generally see fixed assets because we're not sure the life of them. We just pick the life and you're going to depreciate them over 5, 7, or 10 years. Accounts receivable has an allowance for doubtful accounts you have to analyze. That's usually in there. If you get in-kind donations, that's an estimate. Things along those lines. There on the handout, So I won't go over what the letter looks like, but just expect to see that. It usually we issue it at the same time we do our audit. There's a few instances where it comes out a week later, but the date of this letter will match the date of the audit report. Management representation letter. This is something you'll probably get at the very end of it or with the draft of the financial statements. It's again a required documentation the auditor needs to get from the auditee or you guys. We draft it for you. You just have to get it signed by school management, letter attest to the various accuracy of the financial statements, and the information you provided to the auditor was full. You didn't pull certain board minutes out, didn't disclose any related parties you knew about that needed to be in the footnotes, things along those lines. Letter needs to be on school letterhead because your letter to us, it's signed by 2 people generally and returned to us before we can issue the financial statements. Other general wrap-up ones, legal representation letter. In Ed's example of the $1 million litigation or lawsuit, we just have to, once again, kind of confirm like we did for the cash and investment accounts. We just got to have a letter. Auditor will provide you the letter. Once again, it has to be on your letterhead. We have to control the mailing just for potential disclosure purposes. If, you know, highly or probable likely of where it is. Generally, it's too early in the process, or even better, hopefully you guys don't have any of this stuff. Subsequent events, Ed mentioned the disbursements. We also got to look at other things like lease agreements, new debt agreements. If you've signed a contract to purchase a new building from June 30th till whatever the date of the audit report is, we need to know that and put that in your financial statements. Final analytical review kind of piggybacks the preliminary one. We're required to look at all your statement of activity line items by line item, look for major changes from the prior year. This is an area where if we do some journal entries, we might not have documented in the preliminary analytical review the reason for the change. So this is an area where you might get follow-up questions or inquiry from your staff accountant that was out there after they've left. Adjusting journal entry approval, DPI doesn't require this, our standards require this. Because they're your financial statements, for our independent standpoint, we have to send you a list of them. And you guys sign off on approving them, that you understand them, and that you'll make them into your accounting records. So then your records will agree to the audited financial statements. Draft approval, once again, we draft the financial statements. I'm assuming you do in most of your cases as well. Once again, to keep our independence, because they're not our financial statements, somebody at the school has to approve it, whether if it's the controller, choice administrator, somebody on the board. But you'll get a full set of financial statements that you just need an email approval on or whatever to make sure we're good to go with releasing them. And then finally, we're here, submission. Final versions of the report are submitted. We do it for our schools we have, and we copy the schools on the email. So then you have an electronic copy for your records. If you guys prefer hard copies, for if you want to hand them out to donors, board members, just let your auditor know when they're out in the field or when you get this email that triggers, well, we want some hard copies. Just reach out to your in-charge accountant or partner, and then you should be able to coordinate and get that turned around relatively quickly for you guys. All right, now part 4, the reserve schedule. This is an important schedule, but it's also kind of hard because this is one of the last things we probably work on getting done, which is in August through early October. And it goes back to June 30th, and there's some things there's nothing we can do about. So if you run into cases where you think you're going to need a certain amount of cash or investment, dollar amount in your bank accounts, discuss this with your auditor in June or May where you think you're going to be. This generally is not a problem the first few years of a school, but this reserve schedule is a rolling schedule, so it compounds itself every year. So generally by about year 3 or 4, you might start seeing this come up as a problem. So we decided to break this schedule out into about 3 or 4 or 5 sections. There's a DPI bulletin that's kind of like your instructions on how to complete this reserve schedule, what goes into it. It's standard and required for all the audits, or DPI won't accept it. First part here, you want me to go line by line or just overall? All right. So this first part here is line 1 is your expenditures from your statement of activities. your total expenses for these fiscal years you start with. Now we're required to subtract some numbers from there. And there's a line item for each one of those. And each one of these pretty much is either in statute of you didn't pay for the goods or services, so DPI won't pay for it. Not really an expenditure based on your eligible education expense policy. That's where the daycare and church fall under. This one is your partnership schools. That's generally a school district might send a the K-4 program. They might subsidize that for you. We have to show that separately. So we got to reduce our beginning number by those expenditures. Line 12 here, if you're fortunate enough to have historic costs of your building, generally we can allocate certain of that building costs to land. Generally we try to use a property tax bill for a percentage breakout. So this only applies to first year schools. You're allowed to take the expense for land in the first year in the program. So it adds to your bucket. Next section is offsetting revenues. Things that reduce our number that we just came up with. These are all from statute from DPI. Government assistance, this is generally your DPI food money if you're in that program, or if you get any other federal or state grants for, CPE for your teachers. Occasionally you might get a grant money for. Fresh fruits and vegetables is another one kind of under the food program if you get, because choice money is kind of like not first use of money per se. If you get money directly from other government entities, you've got to reduce it. Fundraising revenue, if you didn't identify the direct expenses on your revenues, some of the direct expenses of fundraising are down in your expenditures and your statement of activities. You got to back those out. And then insurance proceeds. If you're fortunate enough to have flooding or someone break in those or fire, and you get insurance proceeds, we got to reduce the expenditures by the amount of proceeds you get.
So I have a question. So as the schools are looking at this, I mean, this schedule obviously is compiled by the auditor for the school. The schools can see a copy of it on the DPI website if they are interested, but how much time and effort do school leaders need to do in terms of looking at this in advance, trying to estimate this, being familiar with this? It's pretty tough for them to understand. What's your recommendation?
Like I said, for the first couple of years, it probably honestly doesn't matter. It's when you're getting closer to either needing that plan in place, which is a 50% of your choice revenue. If you roughly know what your per pupil cost is, that's a good starting point. Or as always, you can reach out to your auditor if they're out there during preliminary time, or just pick up the phone and call them, and they can walk you through it as well.
Excellent, thank you. And one question that we have online is, why do you think it doesn't matter for that first couple of years?
Because you can underspend and not owe money back to the DPI. And generally speaking, that number isn't going to be large enough. If you have fixed assets on your books, that's a number that subtracts from the cash and investment required balance. So it's all a matter of management. If the number is $10,000, it's that materiality thing. If we under or overspent, great, so be it. It's when it starts compounding at $10,000 a year, it gets a little higher. You view it that way?
Yeah, the only danger is like I say, if you have a positive reserve balance, you just better have an asset to cover that.
And not accounts receivable,
Yes.
and not prepaid expenses.
It's be
not
cash or investment
or fixed assets.
yes.
Another question online. This year, a lot of schools received safety grant money. Would that money fall into line 14, government assistance?
I believe it does, because if they can schools look up that AIDS register? Pretty sure they can. If you go on your AIDS register on DPI's website, it's going to show up there as a state funding, I'm willing to bet. So then, yes, it does fall into line 14.
And then a follow-up question on the reserve. I think this is a huge topic for all the schools. It was, even though it doesn't matter potentially the first few years, what can we do now as a newer school in order to plan for that growing reserve balance? I think everyone's very fearful about that.
Well, they're kind of still vague on what even that plan means unless they've changed their course, they meaning DPI. But generally, I mean, the reserve, the intention of that, correct me if I'm wrong, Carol, is almost for, major building improvements or, curriculum changes that occur every 4 or 5 years. computer labs, things like that.
So I would say, I would add to this, I'm not exactly sure the point of view of the question, so feel free to chat a little further on this. There's two issues in my mind with the reserve. So you've got this potential plan, once your reserve hits 50% of your revenue that you're receiving on a given year from the government. But more critical to the schools is the June 30 cash balance they have to have on hand. And so if you have a new school coming in that potentially maybe their cost to educate is quite low, they're getting all this money from the voucher, they might have a pretty sizable reserve balance that they need to maintain from the very first year. And so I'm not exactly sure what the point of view of the question is, but it seems like there's really two issues with the reserve.
Hopefully, if they didn't spend the money, it's still in their checking account, so they do have the cash and investments. It's if they spent it for other purposes, that's when they start running into trouble. Or if they did it and purchased fixed assets, we skipped ahead, this is the bottom of the schedule now. DPI allows you to carry over any undepreciated fixed assets from your statement of financial position, because they understand that you could have used some of the choice money up here for a building expansion. But that expenditure is never on your statement of activities because you capitalized it, you're depreciating it over the life of the asset. So they're giving you credit for it back down here again. So just because this number is positive, this one's negative, but if this was positive, you get to subtract your net book value of property, plant, equipment from your statement of financial position to come down to your true cash and investment balance that you're required to have.
So just to clarify, can the plan to spend it in a future year on a building addition, for instance, or does it need to be spent in the following fiscal year? And indeed, it can be out years in advance.
That's my understanding.
Yes.
To my knowledge, we haven't got to follow up if they followed through with their plan yet, correct?
Right, and so there's not a lot of definition to that at all. So I think common things might be, a board might say, once it gets to a certain level, we want to have a capital campaign to add new windows, or whatever the expense might be.
Playground equipment, whatever.
Whatever it is fine, and there's really no definition, and it's a timeless thing. It's just a plan.
And the double-edged sword with this, I don't know if they're ever going to address it, but I brought it up with Andrea last year. Let's say you do have a big number right here, positive number, and you do need a plan required. Let's say your plan is we're going to buy a new school building. That's not going to fix this problem until every 140th or whatever your life of your building is. So when she told me she was aware of that, I don't know what they're ever going to address it, because you're never getting that expenditure until you depreciate that building. So that's not going to necessarily help this, but it'll help you down here because you get to add back your undepreciated property. So that leaves us with line 19, which is our net eligible education expenses for all pupils. The next little part of the table is just breaking down your PSCP and your all pupil FTE equivalent for both of the count dates. Pretty straightforward. Both of them have been audited and hopefully certified by the time they come out. They come out with a percentage. So you take that 96.46% times that 2.7 million number. And that gives this school that number right there to reduce their revenues and their prior year reserve balances. So in this case, this was a new school, so they started with 0 here. So it's not required because it's negative. If this number here is greater than 50% of that number here, then it'll say yes, a plan, or I forget what the other option is, but it'll say required, I think. And then that's at that point, the board just needs to approve a plan of how they plan to spend that down. So then coming down to here, if this number is negative, organization is overspent, which I guess could be good because hopefully they got contributions in to support that gap. And then also that means you could underspend in a future year and get that number closer to 0. Because as of now, if it's negative, you won't owe anything back if you leave the program. If it's positive, you owe that money back once you leave the program or close the school down.
So once again, just to confirm and clarify that, so your reserve balance is an ongoing compilation of the number.
Yes. They do offer you the ability to pay your reserve back if you so choose during the year. If it's getting too big, then it would subtract from it on your audit. I haven't run across that yet, have you? Why pay it back if you don't have to is my motto.
All of my schools carry it.
So when we get down here, and here's the tricky part, your cash and investments. You need to have that money in your accounts as of June 30th, even though this schedule's not done until August or October. So if this number's positive, it comes here. If you have the SNSP program, that schedule just mirrors this one. You know, I mean, it's in your handout. If you want to see how it works, you can see how numbers flip-flop back and forth between the two. And then here's your fixed asset number. It doesn't include land because we already took the land as an expenditure. So if you're trying to tie that number into the statement of financial position, you have to subtract all land. And then it comes down to your number. Unfortunately, if you have a line of credit available and you needed money and that number is positive and you don't meet it, unfortunately, you got to hold the entire reserve back. DPI does not give you credit for unused line of credit. So things for planning, or if you think you're getting close to that number with your cash and investment accounts at the end of the year, you know, draw down on your line of credit on June 30th and then pay it back on July 2nd or 3rd. So you got to pay four days of interest, but that's a lot less costly for a school than having to potentially pay the entire reserve back. And it's the entire reserve and not just the difference between the cash you have on hand and the reserve balance.
So Jason, I'm just going to reiterate this because we did have a couple schools run into problems last year on this. So as crazy as that might seem to you with this whole line of credit, you might have a line of credit that's already been approved for $1 million sitting there that you could have drawn on by just a phone call, but you didn't because you weren't aware of the need for it, or you didn't realize you thought that was as good as having it, basically. It's not. DPI does not qualify that as being good enough. Just because you have that available line of credit, you physically have to draw it down. So it's literally the cash is in the bank when the auditor comes to your to do your audit as of June 30th. So that's just this critical point that I want schools to understand, because we had some real problems with that last year.
Yeah, and I mean, they fall back on the argument of what do the accounting auditing standards define cash and investment balance. So unfortunately, you can't include accounts receivables in there. Certificate of deposits are fine for that category. So it's not just all of your assets, it's just what GAAP defines as cash and investments. So promises to give are not part of that. If you have that as an option and not a line of credit, you know you're going to come close, maybe you reach out to your donors and ask if they can, you know, prepay a year. If they are supposed to give you $50,000 in 1920, see if they can pay it by the end of the year. There's nothing wrong with that. Your donors are fine with that. All right, that's all I had. Thank you very much, and Ed will wrap it up.
So I'm sorry, we're running a little beyond, and I apologize for that. It's probably my fault. So I will take the blame for that. We'll be done in 2 minutes. I just want to give you my top 10 things that you should be thinking about on the audit. And if you have any further questions, please fire them away. We'd be happy to answer them in an email, or we'll answer them real quick right here. But just as a leading thing, and thank you all for being part of this, my top 10 audit tips. Your auditor knows, by the way, if you are joining this program or you are still in it, we know you're not perfect. Don't expect to be perfect. It'll all work out. We're your teammate. It'll be okay. So don't spend hours not sleeping worrying the auditors come in here, because I've heard that happens. We are not evil people. Number 2, get things as early as possible. If you haven't gotten your date set up for your audit, or you haven't gotten PBC lists or anything like that, reach out. Bother them. The sooner you get this stuff, the sooner you can get it back to them and get the thing rolling. Okay, you don't want to get this the week before you got to have the audit, and then, oh my gosh, I got to pile this all up. Now, people who've had engagements year over year, the PBC lists don't change that much, so you can probably rely on that. Number 3, be prepared, okay? Pull items before they get there. If you wait till the day we get there and you're polling and we're asking you questions and we have new things to cover, it's going to be a terrible day. Okay? pull it as soon as you can, get things as early, all the early listings, get us as much as you can early, and then in turn, require us to get it back from us. Say, hey, I sent you all that, give me your samples. That way you all work together. Number 4, make time. If this is you, when we get there, because you've got meetings at 9, 10, 11, 12, you got to be at this school, you got to be there, that's going to be a problem because we do need you. We are going to ask questions. We are going to need some new information. We're going to need you to pull something. Yes, sir.
Not just for the business manager of that office, but basically everybody in administration needs to make time.
A little bit, yes. We won't use some people as much, but we'll definitely use your director of finance, your accountant. We're going to rely on them a lot, but not as much, but we're going to need a little bit of everybody.
But even the school secretary or everybody who does attendance and all this.
We're going to use probably about a half hour of their time during that week. And it's just because we're going to have to go through those walkthroughs. We're going to have to ask questions. We're going to have to maybe do a fraud inquiry. We're not trying to make your life evil, but that's the only way we get to be able to know what we can about your school. Next up, bring up the big changes early. In those preliminary meetings, in those preliminary things, tell us early, because the last thing you want to do is be like, oh yeah, we built this whole thing in the backyard and we've got $100,000 worth of stuff in there. Oh man. Because now we're going to want to know everything about it. And that's when we're going to require a lot of your time. So hit us, tell us early, just get it out of the way. If you've got a problem, let us know, because we're going to find it otherwise anyway. Okay? I don't know what number we're on, but communicate with your auditor back and forth. It should never go silent. You should always be willing to call us. We should always be getting back to you. If we are not having communications all across the board, all the way through the process, even after we leave the field, we are failing you as your auditor, or you are failing us as a client because you're not getting back to us.
One thing here too is make sure if the people, when they leave field work, hopefully they give you a list of open items or to-do items. If they don't, ask them if there are any. So then that will help with the efficiencies of wrapping up the engagement as well. And that you're not getting called on October 2nd going, oh, we still need to do this.
And just to follow up on that, don't be surprised if new items come up, because usually it comes up because some partner reviewed it and didn't like something. That's why we come up with new items. It's not because like, oh, I'm curious about this. No, it's because some level of review said that's not good enough. This is kind of a little minor thing, but you look like it. You look really silly when you give the auditor something and it doesn't work. Look at your stuff. It's so embarrassing for yourself when you're like, yeah, it doesn't total. Oh, yeah, I forgot. I didn't do any of that right. Or, oh, never mind. Here's this version. It just looks bad. It makes us ask questions. Check your stuff. This is my suggestion for the future. Save everything you give the auditor. Because that way next year you know what we want. It makes your life so much easier. And lastly, oh, we got you 2 more. Use your auditor as a resource. We know a lot about a lot of schools. I can tell you all different situations, how they do it wrong, how they do it right. Rely on us. Ask us questions about, boy, do we do that like the other schools? Is it weird here? Should we change it like this? Should we not? Have you seen that work? That's what we're here for. We're not just working on your school. Use us. Work through things together. If your auditor comes in and says, you're all wrong, you're terrible, da 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 da, that's a disaster. It should be a back and forth. Well, why do you do it that way? Should we do it this way? Work together. It's a team thing to get through an audit. As awful as it can be or great as it can be is dependent on the communication back and forth, how you guys are handling it. And lastly, if your auditor really is this, fire them and hire the puppy dog auditor. Remember, at the end of the day, they should be working together. This doesn't mean that they're gonna give in on everything, but it means they are communicating back and forth. like I said, thank you for your time today. If you have any further questions, feel free to reach out to any of us. Our numbers are on here. I'm sorry I didn't put Lori's on here. I didn't know if she wanted your calls. But feel free to fire away at us. Ask us any questions. Yes, sir?
If when a church and school's new to choice, hasn't been audited, when should they select their auditor?
Okay, so here's the thing on this, and this is my personal opinion, so it's just me. If I was going to join the choice program, I would make sure I had a good year of solid stuff, and I followed all the rules, and brought in an auditor and said, hey, I'm thinking about joining the choice program. What do I got to make sure it's tight? Because remember, the disaster would be is I joined the program, I had nothing going on in County Right for a whole year. Now I clean it up, and now I got to do that year-over-year comparison. And one of my years is going to look like a disaster. So I would bring them in early and say, hey, Jason, or hey, Ed, I'm thinking about doing this. What am I all going to have to want to look into? It just kind of gets me set in the right path, so that way my 18 and my 19 comparison will be solid. Otherwise, you have, as soon as you apply for the thing, there are timings where you should be selecting, and there are lots of us. I don't know how many audit firms do it.
I think someone told me the other day, you guys' website has 10 or 12 of them up there.
Okay, so there's quite a few of us, and you're gonna want to chat with all of us. But yeah, I would try to get us in early. Like if you're thinking about joining in next year, bring us in now and say, hey, just take a look at things. Are we doing it okay?
What's the best process to select an auditor?
So, so a lot of them do a price thing where they go out and price and compare and offer firms to come in and give their pricing. In addition, I'd meet with them. I'd talk to them. I'd look at how many they're doing. I'd look at their experience, how they interact with you. And not only that, I would ask not just this guy how he interacts, but staff too. I'd have them come in. They're gonna make efforts to try to win you over. So have them come in and meet with you. And I like to say, not always just the partner, because to be honest, how often do you think you see the partner in the field? One day. Maybe. So the people in your field are gonna be people like me, and can you relate to me? If you can't, pick a new firm. Ask around to the other schools. What do you like? I mean, she has a different auditor than these people or those. What have your experiences been? That's what I would do if I'm picking an auditor. And like I say, price compare. You don't want to obviously be paying 4 times more than someone else. But also, don't take the lowest one all the time. And make sure all the prices are built in. There are some that will add on and add on and add on and add on. Be careful of that. You want to know all-in cost. That's the audit, the fiscal control, and the enrollment in the fall, and the enrollment on the other side. I want to know what you're going to charge me the whole bucket. Now, if something's disastrous and it's out of, and we screwed up, then I expect to pay more. But otherwise, I want to know what that whole bucket's going to cost me. So that way I can really compare firm to firm to firm to firm to firm. And like I say, sometimes the lowest is what you're paying for is what you're going to get. So be careful. I would probably pick something in the middle with someone who does quite a few of them.
Okay, I think I'm gonna cut this off just because we're so past what we told our folks online and for those here in person. Thank you so much for joining. Thank you too for our presenters, for Lori, for Jason, for Ed. They did all the work to put this together, and so it's time that they're just donating to us. We really appreciate that. Having said that, though, these materials, the PowerPoints, all the additional pieces that they referenced will be on our website, scwaction.org.
The video of today's training.
The video of today's training too, so if you had someone back at your school that you want to see or you want to revisit a certain piece of it, you can sure do that. All of that will be up within the next couple days. scwaction.org, or just give us a call, reach out, and we can direct you to that. So thanks a million for taking your time. And one last question.
You will also be getting a survey. Those are super important so we can plan future trainings, what you liked, what you didn't like, what information you'd like to see us present on. So if you have a few minutes, we really appreciate you filling that out as well. And that will get emailed to each of you.
So yeah, fill out that survey. These seminars that we're offering like this are part of the SCW Action Quality Committee, which is a group of school leaders that have come together to suggest topics. And so if you're interested in that too, you maybe want to join that committee. Give me a note and we'll get you involved with that. So that's it. Thanks so much for coming.
Thank you. Thank you. Thank you. Are we plugged off?